Jon Rivera, welcome to Property Insights, mate. Well, now we have met before. You are at the opening of one of our better YBR branches down there in Adelaide, as I recall. You're currently the director, and someone's going to say, why Adelaide? But why were you in Adelaide? But the director of residential project marketing and sales Queensland for Colliers, one of the great real estate agents in this country. Colliers that is, and you're the director of residential project marketing. And for a start, I think maybe you could tell me, what does project marketing mean?
Well, thanks for having me, Mark. Project marketing it's a really interesting term now because it's almost you're an advisor. I'd say it's to the developer. To the developer, we're there from almost site acquisition through to completion of a project, and that means that we're getting the product ready to meet a market, sell the product, and then obviously deliver that product with the developer.
Do you say to the developer, you know what, mate, those 2 bedrooms, 1 bathroom apartments, in terms of the design phase, just won't work out here in this particular area of wherever it is.
Yep.
You need to have 2 bathrooms and a guest bathroom, guest
toilet. We get involved in everything like that. So it's always new. So project marketing, in a sense, in Australia is always a new community, either master plan community out in the suburbs or a mega tower. And that's everything brand new. So that's involved in every form of that product from a delivery point of view, with the design, as you said, about looking at a 2-bedroom from a square meter rate, how big the balcony is, where the bathroom should go, the aspect, pricing it, looking at the competition, everything. So you've got to be pretty well-rounded, in a market, more so than, say, a general real estate agent.
Well, the general real estate agent is just selling for the price on the day if it's an auction.
Correct. We've got to tell the future.
Well, you've got to tell the future because generally speaking, the developer, in order to spend the first dollar from his funding source, the banks, usually has to have a certain level of pre-sales.
Yep.
And so if you have got the wrong product, if the developer's got the wrong product, or you got the wrong pricing, you might not even be able to draw down a dollar.
Yep, it all goes bad.
Maybe you could explain how that works. So my understanding, it's a while since I've done one of these, but the developer maybe acquires the land, maybe he's always had the land, his family or whatever. The developer then says, it's time to put a tower on here because they changed the planning rules perhaps. And the developer is usually allowed to put that land in as percentage of the funding, but they've got to go along to a bank. If you go along to the bank, this is oversimplifying things. We go along to the bank. A bank says, yes, we'll lend you 70% of the total value of the completed total value. Straight away, that means, well, what's the complete total value? How much can we sell these apartments for? A lot of times the developer sort of knows what he or she would like to sell it for, but they don't really know. They need research, and the bank's not going to accept it just because the dude says it.
Yep.
Because you can put any number in front of that. They come along and see you guys. What's the first thing that Colliers would do?
Well, the first thing that Colliers would do and what I would do is we'd look at the project, we'd look at the product and what the mix is, what the size is, we'd look at the detail, and then obviously the location of where we're going to sell this. We have to get to an ultimate selling point, which is what is that product worth when we're going to sell it? And so you work backwards from that. And it's also about site optimization. That's probably the most critical, and there's some real challenges facing developers now. Probably more so. Selling's easy.
How do you mean?
Well, selling's easy now. Right now, it's probably the easiest part of it.
It's
construction is probably the linchpin in everything with residential development right now.
You mean the quality of construction? Like whether I put marble cost or cost?
Absolute cost.
Yeah.
Is getting a price that a developer can actually go and say, that's what it's going to cost me. And a bank as well. Like a bank's got to say, well, it's going to cost me $100 million to build this, but is it going to cost me $120 million to build it? And that's the challenge, is that we're seeing so much pressure on that construction market. And it's probably the toughest thing right now, I think, in Australia. And it's going to impact everything we do from a residential supply point. It's already doing it.
And is that partly because, like, when you're advising the developer, look, mate, we're developing in the beachfront of the Gold Coast. The expectation of the buyer is it has marble in the bathrooms and good cooking equipment like Miele or something like that.
Yep.
And a certain type of plush carpet and a few really cool finishes, and it needs to have a nicely tiled balcony and etc. And that, of course, they're premium costs to the developer, and then the developer's got to get a builder to do the building.
Yep.
One that's not going to go broke, by the way.
Correct.
And that's pretty important, and can get built on time.
Yes.
Because if it's supposed to take 2 years, you're saying, well, we reckon you can sell these in 2 years' time. You're predicting the future. Well, we can reckon you sell these for $25,000 a square meter. But if all of a sudden it becomes 3 years' time, the market could tank, and it might only be worth $20,000 a square meter. In which case, the whole thing is it's going to fall like a stone.
Well, look, that's if we take a couple of steps back in that and we go, if it's going to take you 3 years, let's actually say that we've got a site, we've done the development application, we've got an approval, and we're ready to go. We've got a builder locked in, and that builder's going to take a year to finish this. But what if it takes you 2 years to finish it?
Yeah, supply problems.
Correct.
Or CFMEU problems.
Exactly. And that's where the huge problem is right now, because the cost of a construction to hold their price for over a year and to continue, like the cost of, say, you said marble, or even the subbies from electrical plumbing, like their prices are just going up and up and up. Every month that you wait, it's going up.
Yeah, so you better do it now.
But then that's the thing. Who wants to lock in right now?
Yeah.
And so I think this is I've never seen this market before, what we're in right now.
Are we in is this an existential threat to supply of real estate by virtue of new developments?
Yes.
Being pretty much stopped because of the uncertainty that exists.
Yep. This is you got to think the apartment market right now, I'd say on the east coast of Australia, is under threat. And when I say that is because it's kind of now limited to a very small market of where you can actually supply it and where you can build it. And you got to think, Mark, like what was the apartment like? Say 20 years ago for you, when you're looking at the loans that you were doing. What was an apartment for someone? It was a first home.
Yeah.
It was something affordable in a good location, maybe for a young couple.
Yeah, but 2 bedrooms, maybe a bathroom and a half.
Exactly. And that serves a huge purpose, because you didn't need to go to a home, out in the suburbs or buy that big block of dirt. And that market right now, that affordable apartment market, has disappeared.
Right.
And so we're not supplying that.
Why has it disappeared though?
Because we can't build it.
Yeah, but when you say you can't build it, is because you can't find, or developers are not prepared to take the risk in relation to the building.
Exactly. It just feasibility wise, it doesn't work.
It doesn't work. Yeah, because and maybe we could just go back a step. If the total development costs in the example you gave is 100 million, for example, and the land is worth 20, so it's all up going to cost you 100. The total development costs 100 million. The land costs you 20. The building's going to cost you 80. So the TDC is 100 million. Generally speaking, as I recall, the developers want to see like a 20 to 25% return. If you have to now put a contingency in there for, 10 to 15%, that eats into your return pretty quickly.
Well, the banks don't like that.
Even if you can assume the banks are going to accept it because you've got enough other assets that they could jump all over, even if you could assume that, developers are going to say, well, I'm not going to risk borrowing 100 million to get 15% return after you take your contingency out, because it's just not worth the headache.
Correct.
And if all you need is a delay for another year, and that 15%, that 15% now is going to be affected by 10% interest on the 100 million, which is another 10. So that 10 can take your 15% down to 5% really fast.
Yeah.
And
that's happened. That's exactly what's happening.
And that's what happens.
Yep.
And sometimes these developers take the risk, and actually that's the reason they've gone broke.
Yep. Highly lucrative industry.
Yeah.
Good returns, but also when you play that lucrative game, well, you're going to expect some pretty high risk.
So it's mobs like you guys. I don't know if Richard Ellis still exists, but
yeah, CBRE. Yep.
CBRE. They're called CBRE, right? Yep. Because I use Colliers and CBRE, or they'll call Richard Ellis in, but I used Colliers and Richard Ellis in 1996, I think it was, to do what was the first big development to ever be taken to Hong Kong and Singapore for pre-sales. And there was a guy, I can't remember their names, but actually there was a guy from Richard Ellis. His name was, believe it or not, Tony Ellis, and but not related to Richard Ellis. We just happened to have the same surname. And the guy from Colliers, I can't think his name was David something or other.
Milton.
No, but anyway, it doesn't matter. But they helped us with everything, right down to feng shui, because we're selling in Hong Kong and Singapore.
Everything.
Like because I never heard of this thing called feng shui. I was like in my 30s, late 20s, early 30s, and we were running the project, me and another guy, and right down to things like, will Chinese people buy this if you've got a mirror at the entrance, or if the front door faces the back door?
Yep.
Because apparently all the good luck just flows straight out. And a Chinese person won't buy it. I don't know if there's still superstition like that. Even things like, we didn't have a fourth floor. It was a 20-story building and there was no fourth floor. There was no 14th floor. It was like we went from 3 to 5. Silly little things. We didn't have 4s anywhere because 4 apparently is a
bad number.
Bad number.
Still exists.
For Chinese. Right, still a deal.
Still exists,
So, but the agents told us all this stuff. We didn't know. We were the developer. The agents told us all of this stuff. And then they helped us pre-sell it. And I recall we had to sell 100%. We had to pre-sell 100, at that time, 100% of our total development cost. Not the total value, but the total development cost of the whole project. Otherwise, we couldn't draw down $1 of our bank funding. We had 3 banks syndicated to do the whole thing. And today, the position would be you would never do that development. We hardly made any money because by the time we had people drop out, by the time we got up, we had bloody union problems, all sorts of things happened. It took, instead of taking a year, it took nearly 4 years, 2 years, it nearly took 4 years. Et cetera, et cetera. And I can sort of understand why developers won't do anything, which is the reason why the AFR recently held a big summit. I think it was beginning of this year. I can't remember. I went. Anyway, it was about the housing crisis. Everyone keeps talking about this housing crisis, but there's no solution. What do you think they should do?
This is the silver bullet, right, in terms of what everybody's asking. And, flying down here today, I was thinking about, because I thought you were going to ask me this question, what is the solution to a housing crisis, the affordability crisis? And everything that comes down to my, very being at the moment and my experience in this market is always got to do, they've got to stop meddling in it. It's its own ecosystem. We fall part of this ecosystem of supplying and the demand and et cetera. The more the government keeps getting involved, and they're saying they want to deliver $1.2 million
1.2 million houses. Or dwellings. Yeah.
And I go,
that's over the next 5 years.
Play SimCity with this.
Yeah.
You put 1.2 million. Where do you do it? What hospitals do you do? What water do you need? What energy do you need? All the things that equals a body building it, which creates more inflation, et cetera, blah, blah. And so I just go and look at this, and we've caused a huge, like COVID. COVID was like the catalyst event for me that changed everything, the way that we looked at residential property. And it's also the problem starter. And you go, okay, well, how do we fix this solution of housing affordability and supply? And I go, well, this apartment market is actually critical. It's so critical because we can't no longer go horizontally in this country.
Yeah.
It just costs too much. Like to build a hospital, to make a city, to bring 1.2 million dwellings into an area, or like 5,000. I'm working with Bob L on a project where he's got 5,000 dwellings in northern New South Wales. And that project's taken over a decade. He's been fighting it for over a decade. Like, how are you going to deliver? How are they going to deliver?
There's only people like Bob Hill who have got the bloody ability to survive these things and the determination.
Yeah.
Anyone else coming in this market wouldn't bother.
And we're still trying.
Yeah.
We're still trying. And that's only got 5,000. So the thing I look at it, there's no silver bullet here, but they've got to stop meddling in it. And the more they keep doing it, it just keeps increasing costs.
So what about things like when you talk about meddling, when they start having conversations about getting rid of the capital gains tax discount, or they start talking about getting rid of negative gearing, what effect does that have on a developer?
It has huge effects. It has huge effects for the renter. And that's the thing, like the more that they keep getting involved and trying to...
Is that an example where you don't want to meddle?
Exactly. Planning, financially, where they do obviously the negative gearing, probably the biggest constraint I think that developers are facing is actually the local council and the state council, because the federal governments go, yeah, let's go and deliver some housing. But then it comes down to a state and a local, and that's where it gets in the glue.
Yeah, well, because what's interesting about this, John, is that the federal government has no jurisdiction over this stuff anyway.
Exactly.
It's a state planning makes the rules.
Yep.
And then the local council approves under those rules. But the federal government doesn't have anything to do with those rules.
Exactly. And you got to think, like, the people behind that don't necessarily want 5,000 homes in this area.
You know why? Because they want to get re-elected into the council.
Exactly.
And if I already live there, I'm going to be saying, hang on, I don't want 5,000 more cars here.
It's a 4-year thinking.
Or 10,000 more cars.
Because it's voting.
Yeah.
It's votes.
And I like being on the council.
Yep.
Because I like to be the local alderman, and everybody says I'm a good dude.
And that's actually a really good point, because this is where I'd say to your answer, about how do we fix it? And it's stop thinking it like a share market. Stop looking at it every day. It's a long-term asset. That's from an investment point. But then from a government point or I guess a private sector point, the more that we keep affecting this ecosystem from a supply point, and that's the local council, the state government, you basically just keep holding it up. You keep adding costs. You keep making it more challenging, and that just goes to a buyer at the end of the day.
Yeah, it gets passed on.
It gets passed on. And you got to remember, like, Australia's a pretty lucky country. People want to live here. And I always remember this, and this is really early on in my career. I met a politician and he goes, John, one of the things that I can always do and I feel safe in Australia is that if the economy goes down, we just pull a lever and we let migration in. And what do we need for residential? We just need bodies.
Yeah.
And that's where it always happens. Like, and look at what's happened from a population point since COVID. Like, how do we fix that? There's been, say, for example, in Queensland since COVID, Mark,
Queensland's been the biggest
430,000.
Yeah.
430,000 new people have come in, into that time frame, more than any state.
And that's interesting. And by the way, 430,000 people are not necessarily immigrants. A lot of them are just people come from Victoria, New South Wales too.
Yeah, it's interstate, it's overseas.
And one of the great areas that I must say I'm surprised by it, but the Gold Coast or Surfers Paradise, that southeast Queensland, let's call it, it's below Brisbane's type of thing. Once upon a time, when it was a boom, it was going up. When it was a bust, it was the worst affected.
Yep.
But for some reason, all of a sudden, this is not the case for southeast Queensland. It's just going up and up and up and up and up and up and up. And can you give me some sense around that?
There's no supply down there. And I can tell you, I was in the GFC on the Gold Coast working that market. And you're right. Like it was, as soon as it went bad, everybody sold up.
I'm out.
Yeah. You saw it, right? Super got hit, all my holiday.
Oh, we got a period, John, where we wouldn't lend to people.
Exactly.
We said, I'm not lending more money into Gold Coast.
No. And why would you? It wasn't as diversified as an economy. There's been lots of changes there where it's been able to hold its own now. And the challenge that we've got, very similar to Sydney in that respect, in terms of Southeast Queensland, particularly the Gold Coast, it's geography. It's got mountains to the west. It's got water to the east. And then you've got a very small slither of where you can actually do development.
It's got a border to the south.
It's got a border.
And then it's got Brisbane to the north.
Exactly. And, you think about COVID, obviously, people said, I'm out. I'm going to go to the sun. And I could afford to go and live in a pretty good area and have some money in the bank. And that's what they did. And I think the Gold Coast, I think, is probably more known internationally than Brisbane.
Do you think it'll outprice itself, the Gold Coast? Because it's gone fairly
it's gone
rapidly.
hard. But you know what? This is the way I look at it. And just this is, again, from working on that.
And I'm not talking about Labrador either. I'm talking about like the coastal
area. The whole thing. And look, this is where I'd say, and I just had a look at the stats when I came in at the moment. From a registration point of view, the Gold Coast is sitting on about, if you think about its supply pipeline, it has no land.
Yeah.
Zero land. So from a housing point of view, it's vertical. It's a vertical area.
Yeah.
And so, I look at that and I go, well, what's the biggest thing we've just been talking about is trying to supply a market. How hard is it to supply a vertical tower right now? Not everything is a AAA beachfront apartment. And that's where the Gold Coast at the moment is suffering. It is needing huge amounts of supply because the demand is so strong. The vacancy rates in some cases are like below 1%, 0%. That shows you like a future, and this is a great thing. This is probably the most interesting is New South Wales government just delivered a brand new mega hospital at Kingscliff, which is just south
Tweed,
right on the border, right?
800 million.
Huge. they can't get workers because people are queuing up, nurses, everybody trying to go and work. It'd be great to work in Kingscliff. The thing's beautiful. And they're there and they're like, where do I rent?
Yeah, where am I going to live?
And Bob's there going, I've got 5,000 waiting for you.
Well, because that
can't unlock it.
That area, Kingscliff, has exploded.
Yep.
Its
prices. It used to be affordable.
Yeah.
It used to be like a quiet place to go. Yeah. But that whole movement has just pushed south. And then you know what? It's actually pushed north into Logan. And Logan, which is between Brisbane.
Logan.
Yeah, Logan. I'm seeing $1 million resales in Logan for areas that we were selling, pre-COVID, sub 500,000 for a house and land.
Mate, Cameron Smith cannot any longer say come from the tough Logan hills of Logan.
I'm a Logan boy as well, so you got to go easy, Mark.
Absolutely, you can't. Well, it's a bit like where I come from, Punchbowl. There's like 1.5 million. The average price is 1.5 million. Like I can't believe it.
Yep.
But Logan's is selling apartments, houses for $1 million.
I'm selling in markets there right now. House and land, brand new house and land, 4-bedroom, 2-bath, and say 400 square meters. And that product is going now for...
The land's 400 square meters, yeah.
The land is 400 square meters. The house is about 190 square meters. We're selling right now brand new homes that aren't built. They've got to get built with everything included for over 800,000.
Wow.
And that's why I'm saying this is how important, we've got to... We don't have a lot of land up there. And then you think, well, how do we supply it without having to go and put all the road? And, you talk about the big energy crisis that they're talking about in government right now. How do we make more cities?
Yeah.
It's actually cheaper to upgrade existing areas with infrastructure than it is to go and build a new city in this country. And that's our future.
And do the government come and talk to people like you?
We do talk to them.
Yeah.
It's always a bit harder to, and we they talk to us, but I don't think they really can go and do do it is probably the hardest thing for them.
Do local governments, state governments, and local and state governments talk to you? There's no point talking to the federal government. The federal government can't do anything because it's a local level. And by the way, Queensland is a lot better than every other state. I mean, Brisbane Council and whatever the equivalent down is the Gold Coast. Relatively speaking, I'm talking about, because you're a huge council, and it's a lot more it's a lot more in favour.
We're a lot easier to work with.
Then you go down to New South Wales, my God,
your councils are like the size of our suburbs.
Yeah, and they're just like really difficult.
Yep.
And or same Victoria's even worse. Apart from the fact they got a land tax down there for everything over $50,000 in value. Do you get dragged in and they say, well, okay, John, what do you reckon we could do to sort of open up more areas here or go build more towers?
We've got a really good advocacy, which is like the UDIA, which is the Urban Development Institute of Australia. And those guys there take the fight, through to state and local. I think I think there's two sides to that side, to the government and obviously the industry. There's people that are really trying to make a difference and understand the challenges. And I think there's other people that are actually fighting against it. And so it's because of the agendas. Like we're in a very green mentality right now. We don't want to see the bad side that comes with population growth, the impact on the environment. They don't want to see that. But that itself is, the challenges in this country. We're very centralized. We built our cities very centralized. We don't have a 3-dimensional living like the US.
80% of Australia's population lives on the coast, and we're the only country in the world that does that, and we're the only country in the world that has more than 55% of its population live in 3 capital cities.
Yep. Well, that 430,000 we spoke of, 83% of that went into Southeast Queensland.
Wow.
That's the average. So you think all those people into an area that's 12,000 square kilometres or something like that, and that has no supply, and it's lost an element of its supply.
It's going to burst.
It's burst.
Yeah.
It's already happened.
Because, the reason why people went there in the first place, they're going to still go there.
Yeah. Yep.
Because
very different in Melbourne. Melbourne, probably I'd say the opposite of Melbourne.
Melbourne's gone backwards a bit.
Sydney and Brisbane, Melbourne's gone a little bit backwards, but it's not a bad market. It's just very good at supplying itself. It's very planned out. Sydney and Brisbane, very similar. And this is where I look at, if you ask the future of me and you go, okay, John, what's the market look like in a couple of years? And I go, exactly like Sydney. Brisbane is going to be like Sydney. It is going to be just as expensive. And it's because we share very similar things. We've caught up a lot in the last 5 years to Sydney. We predicted that Melbourne would be the 3rd most affordable city. And it did. It started to happen. Like Brisbane's now more expensive than Melbourne. Melbourne, very good at, I've always called it the leaky bucket because it's so good at supplying itself. We're almost oversupplying itself, and that's what it's done. And then as soon as it gets a bit of a downturn, those fundamentals change. Whereas in Brisbane and Sydney, as we've seen it, like Sydney's pretty flat right now. It's not it's not bad, but it's
grown a bit.
It's grown a bit. But fundamentally, it's always going to grow a bit because it's got the same challenges. It's got a lot of overseas migration.
That's where the jobs are.
Where the jobs are, and supply is tight. And that's the challenge. And that's the secret.
So bottom line is real estate is going to continue to be a great asset class.
Absolutely. A long-term asset class.
Long-term asset class.
Long-term asset class. And that's where, we've got to stop looking at it like the share market. That's probably the one thing.
Yeah, it's not. Yeah, you're right. We're not bouncing around in and out every month.
No.
It's a long-term asset class.
Exactly.
But I still, someone asked me the other day, I still think it's the best asset class there is.
Well, look, from a mum and dad point of view, yes.
Yeah.
It is.
In terms of knowledge and understanding and, like how you can manage it. I'm sure it's not as liquid as a share market, but it's still the best asset class.
It's easier to understand for the average Joe.
The average person, because they can listen to this podcast, but they can read stuff, they can find out, there's no supply.
Yep.
It's pretty obvious, no supply. And we keep talking about the housing market crisis. Well, if you've got a house or a bit of real estate, you're on the other side of that transaction. You're going up.
Yep.
And and Australia's love affair with property is going to continue.
I think so, and the world's. And this is where I keep coming back to is that people want to live in Australia.
Yeah.
Like we have a great lifestyle. If you travel, you know exactly what we have here, and we've got resources to back it. And that's where I look at this and we go, well, the future of residential property in Australia, I think, is still got growth in it, mega growth. It's got some challenges, definitely, but this is actually the most exciting market I've ever been in. In the over 20 years I've been doing this, what I'm seeing right now, I've never seen this before. It is the most exciting.
That'll do me. Jon Rivera, Director of Project Sales or Project Marketing at Colliers. Thanks very much, mate.
Thanks, Mark.
Appreciate it.
Cheers.